Very good afternoon, everyone. Welcome to yet another uLaw webinar. In today's topic, we're going to be talking about the law office expense management or the legal office expense management. We've kind of divided the expenses as every legal business would incur in terms of their client expenses or disbursements as they're often referred, as well as your business expenses. And we're going to have a slide share and a discussion, and I encourage you to participate in that discussion using our chat window and talk about these expenses, how are they best managed, and best practices, and walk you through using uLaw, which is a Canadian practice management and accounting software, just to illustrate the concept, definitely not to showcase a product or any sort. How these different expenses can be entered into your bookkeeping software, how you manage them, the Law Society's requirements for reporting on these expenses, and some best practices, as I said, about how you can govern these expenses. Today's CPD session, or rather today's webinar, has been approved for 1 hour of CPD, both in the province of Ontario as well as the province of New Brunswick. So to welcome our friends from both these provinces, I kindly request you to ask your questions using our chat window. Your lines have been muted, so do encourage you to communicate or collaborate with us using the chat window. If you do use the computer for audio, we've heard that dialing using your phone has a better quality. Just a quick piece of information. Other than that, we hope that you enjoy the session. This session will be recorded and be available to you early next week. And we also encourage you to send us a quick note or an email to support@uLawPractice.com, just confirming your attendance, because you can use these towards your professionalism CPD credits, 1 hour of that. Just in case the Law Society does ask us for record keeping, we would love to have that handy. Okay? So again, welcome once again to our webinar today, which has been approved for 1 hour of professionalism CPD credits in both Ontario as well as the province of New Brunswick. And it's about legal office or law office expense management, managing client and business expenses. Now, like every other uLaw webinar, today's webinar has an agenda, and the agenda is pretty straightforward. We're going to be covering the different types of expenses, and we've broken it down at a very high level as client expenses or disbursements, as well as office expenses or business expenses that you may incur in running your business, your legal office business, right? And then we've further broken the concept of disbursement and the opportunity that you have as a legal professional of how you can handle or deal with these expenses or disbursements. Okay, so I'm sure you're well aware that as a legal professional in this industry, you have this wonderful opportunity of using the trust account by accepting retainers, which are amounts of money from your client that are paid in advance so that they can retain your service. And you are now able to docket your time as well as report all of the expenses and disbursements that may occur in running through that file. Examples of court fee, application fee, right? And the opportunity you have is to either pay for those expenses from your trust account directly, because this is not your money anyway to begin with. Or you may have a discipline of being able to pay them through your own business credit card, collect some airplane miles along the way, and then raise an invoice, which is an official document, and then transfer the money from trust to general, right? So we're going to talk a little bit about that and the advantages of doing one of both ways, right? So why not do all of it from trust? Right, so if you can what would the advantages be? What are the advantages in managing disbursements from your general account? And we'll also look at types of general accounts, such as billable, unit rate, mileage, etc. And we'll also touch upon the expectations of the Law Society in terms of your disbursement or expense management for client expenses. Okay, so we'll focus on trust account, disbursements, types of general disbursements, Law Society expectations, And then we'll move on to understanding the types of business expenses that you tend to incur rather. Types of expenses such as rent, software expenses, bank charges, and even salaries. So if you're a law firm running multiple individuals who participate in your firm, you may be having salaries. That's considered as a business expense as well. And we'll talk about how you can manage those expenses, the importance of capturing these expenses as and when they happen, so that the bookkeeping software or this process that you have can start to help you with the reconciliation and all the ledgers and journals that you have to produce. Last but not the least, we'll look at the expense book, what that looks like, and a little deep dive into some of the analytics that legal accounting software can provide you with regards to expenses. Okay, so that truly is the agenda for today, and we'll try and cover this with an inclusion of a quick demonstration of how you would handle that in a software. So we'd like to start with a quick definition of a disbursement, right? What is a disbursement, and what does it mean to my business? We've kind of broken it down by definition. Disbursement is the act of paying out or disbursing money to run your business, expenditures, dividend payments, all that a legal professional may have to pay out on behalf of a client with regards to a transaction. And a transaction could be for a particular matter, right? Let's assume it is for a particular matter. And what would you look at it from as a layman's term? It's the expenses incurred for your client by your law office or your legal office, right? So it's not an office expense. A disbursement is really the expense that you incur on behalf of your client, someone you've retained, so a client engagement that you've already had. In terms of an accounting aspects, what that really means is you need to now record it in your books so that you can balance your accounts about how you spend, invoice, and recover that expense. Okay, so it's really important to track and measure not only the amounts that has been spent, how did you spend it, right? Did you raise an invoice to recover that, and how did you recover that expense? If you've not been able to recover the expense, then obviously that would be a loss, because that would be money that would just become a business expense, right? And bottom line, when it comes to what the Law Society's audit requirements are that you need to manage this information, and the books and the corresponding books report on those expenses. Okay, pretty straightforward. Now, in total contrast, what is a business expense, right, or an office expense? The expense is the act of paying out money, such as money paid, same thing, to run your business. But in this case, this is to run your business, not on behalf of your client. Expenses such as rent, buying computer, software, office furniture, dividend payments, as well as salaries, and anything that you may pay out on behalf of your business to run the business. From a layman's perspective, it's expenses incurred for keeping the lights on to run your law office. Accounting terms, you still need to manage those books, right? And still need to manage how you spent it, including the taxes that you may have incurred paying that expense. And from a Law Society's perspective, an expense book is something that they expect you to produce. Okay, so they're equally important. They just have their varying characteristics. The one major difference that you have between your disbursement and your office expense is with the disbursement, it's a recoverable expense. So you have the opportunity to recover or get paid that money, whatever you spent on behalf of your client, back from your client. Okay, so which means that you will get paid back what you pay on behalf of your client through an invoice, for example. And why do you even bother tracking them, and why do you need to use the advent of technology in today's context of being a 21st century legal professional? Why do all of that? Because if you don't, then you really truly don't understand over a period of time how much of money has gone out of your business, how much of that needs to be recoverable. And if you don't necessarily track your business or office expenses, then it's hard to manage your taxes, such as HST, GST, PST. Because when you file your taxes, those are the expenses that can always be used to balance that HST that you owe the government. Okay, so quick difference, or a subtle or a major difference truly, is the fact that a disbursement is a client expense that's recoverable. But the opportunity to manage and track both these types of expenses are equally important. Okay? All right. How do we manage disbursements? So let's start with the client expense or the disbursements. What are the key steps? And we've kind of broken it down to two characteristics or two scenarios. As I mentioned, a legal firm that deals with trust money, a legal firm that deals with only general, and there's no right or wrong way. Both of these characteristics have their own advantages and disadvantages. Okay, but let's take in terms of how you record keep this when trust is involved. At the time when you incur that disbursement, what's really key is to record that disbursement transaction. When did that happen? The key 3 or 4 questions is, when did that disbursement happen? Very key to have a date. How is it paid? Did you use your business credit card? Did it come out as a check from your general account? Did you pay cash, which means the business owes you money? So tracking how it was paid is equally important. And the reason behind it, the fact that this is a client expense, you truly want to track the reason, so that it's easier for you to go back and recover that expense from that particular individual client, right? What was the reason behind that expense? Was it an application fee? Was it a court fee? And also you want to marry that to which matter was that expense for? Which client, which matter? So that kind of leads to my second point in my bulletin, is recording the client's name is very important. Also tracking the matter for which that particular disbursement was incurred. Okay? Now, if paid from the trust account, it is important that you incur the disbursement and money is taken directly out of your trust account. And when the money is taken directly out of trust account, you truly don't have to raise an invoice because you've just used the funds in your trust account to pay for that disbursement, right? So the funds in the trust account have just reduced by the expense that you've paid off. But if you were to consider the use case of now, let's say there's no trust account involved, or even if there was, you're using the general account to pay for your disbursement, then there's an extra step that you have to take in recovering that expense. And that is, you obviously incur the expense, right? You decide what portion to invoice, right? And then very importantly is to raise that invoice and make it a point that that disbursement is a transaction that's outlined or elaborated in that invoice to your client, so they understand that you actually paid on behalf of the client using your own funds. And here's a court fee for $95. There is no tax, because some expenses or disbursements are, have taxes involved. Some of them are tax exempt, so you want to track that as well. But through that invoice, you're letting your client know that you're going to be taking that dollar out of either your trust account, or you expect that client to pay you back as a client payment. Okay? Now, if there is a trust fund involved, once you raise that invoice, you can move the eligible trust money, which equates whatever was the amount in that invoice. Could be a combination of dockets and disbursements, however the case may be. And that's the eligible trust money that you can now move from your trust account into your general account. If there's no trust involved, as I mentioned earlier, if it's a $95 application fee, then that's the $95 as client payment you should expect. You should follow up with your client and ask them to pay you for that. Okay? Either way, it's important to record it, record important information in terms of when that disbursement happened, how is it paid, the reason, the client name, the matter name, and how you've gone about dispersing it, either through trust or through general. For those who are using, again, just a quick note, for those who are using the computer to listen in, I'll kindly request you to mute your computer lines as well. Thank you. And for those who are just joining us a bit late, this CPD or webinar has been approved for 1 hour CPD session, both in the provinces of Ontario and New Brunswick. Okay. Alrighty. So the next slide, we're talking about how do you spend that money, right? And what should you record? I mean, we've already spoken about it, but we've kind of broken it down into money coming out of your trust and disbursements or money paying out of your general business credit card owner's pocket expense, right? Some examples. For example, court fee. There's certain types of fees that, truly you're not going to make a markup. There's no markdown opportunity. It's a billable. It's exactly what it is that you're going to pay for. So a court fee is $95. You can't charge $100 for that, right? So it's $95. So those are types of examples that are great examples for you to use your trust funds to pay out those disbursements. Okay? When paid out of the trust account, as I mentioned earlier, the one key advantage is that you don't have to recover that expense. That's just money gone right off the trust account. You don't have to worry about it. You just have to stay on top that there's funds in the trust account for you to manage and use that to pay that expense. Because if there's only $50 in your trust account, you can use that to pay off $95 application fee, right? So it's about the only thing that you need to be cognizant about. But other than that, you don't have to take any additional steps to recover that expense. And as I said, it's not your money to begin with. So by using the trust account, you're just able to show the expense happened within that. And what it allows you to do is it reduces the number of bookkeeping steps. In fact, it reduces it by 1 or 2 steps compared to dealing with general. Okay? Now, if you're using the general account, what are the key steps that you need to keep in mind? Again, everything that we looked at the previous slide. Record the expense information with the date. Very important is point number 2, including the appropriate taxes. Okay, because that's, as a business, you can use that to your advantage to show what the HST or paid was for that expense. The method of payment, was it, again, as I said, credit card? Was it using a check out of your general account, owner's pocket, etc.? But the information that you capture regarding the client, regarding the matter, regarding the transaction itself remains to be the same. You still have to capture the matter name, the client name, what was it paid for, and any other details that you may want to capture along the way. Okay? And when do we recover the disbursement and why should you do it? Okay, so just before raising that invoice, once you've recorded all the information, you're pretty clear about how much of an invoice you want to raise, which includes that disbursement. Keep in mind that if you want to mark up or mark down that expense, especially if you're doing it out of your general account, in fact, only if you're doing it out of your general account, you do have the opportunity to mark up or mark down an expense, right? So a good example would be if you're using a software across 5 or 6 matters, you've done your best to negotiate with the software company to buy the licenses for 10 at the cost of 5. But when you're spreading that expense across your clients, you may actually mark up that expense. So if it cost you $100 to buy that license and you're spreading it across the 5 clients, you may actually charge $20 from each client or $25 from each client, marking up by another $5. In some cases, you may mark down. So let's say you use the third party, another legal consulting firm. You may use a paralegal service as a stand-in. And it may be at your discretion to decide that you're actually not going to charge. Let's say the paralegal firm charged you $100. It may be at your discretion to charge your client only $90. Okay, so that's an example of a markdown. These are great examples when it comes to paying out of general. And once you've decided these components, you've got the numbers in, you would obviously raise the invoice. If there's trust money involved, move the money from trust account into your general account. If there's no trust money involved, ensure that you are following up for a client payment. And the reason I repeat this is the critical component of disbursement management is the lack of tracking these disbursements as and when they happen. Many times it's scampering of going back in time to find what really happened, which makes it harder for you to manage your books. Right? So trying and repeating the same thing again and again kind of hopefully leaves you with a good taste for what needs to be done and some of the best practices that you may keep in mind. We wanted to leave you a couple of slides that kind of paint a picture about types of disbursements that you may want to keep in mind as potential candidates that you could use from trust, general, exclusively for trust, exclusively for general. Okay, so if you're looking at a billable disbursement, you could use both trust and general. Okay, if you're using any unit rate disbursement, a good example would be fax, then you still just want to use the general account. Okay, if you're using mileage, strictly want to stick to general. Any recovery of expenses on the actuals. So we spoke about a court fee or an application fee where you're basically just recovering the exact actual amount that you spent is what you're recovering from your client. You can use it both from trust and general. But as I said, if there's a markup and if there's a profit margin on that expense, then it's got to be done only from your general. Even if you're outsourcing certain paralegal work or paralegals are outsourcing it to other consultancies, as long as it's on actuals, you can still use it using trust and general. But if you're using it either through a profit margin or even a reduced loss margin, then keep in mind that needs to be done only from your general account. Okay? This webinar is being recorded. I'll leave it a couple of minutes for you to pause on the slide so that you can take that back home. We're going to try and skip from this slide. I want to just give you a taste for what the documentation or the bookkeeping or the ledgers that reflect these expenses. But because we're going to be generating out of the product later on, I want to move forward so that we spend enough time in demonstrating it. But this is a quick snapshot of some of the ledgers and journals that you are required to manage and maintain and produce during audits, right? So during audits, very important compliance documents are the disbursement ledgers and journals, both for trust and general. So very important that they review both the trust account and the general account. Fee book with appropriate taxes being captured. Why do I talk about fee book? Is because that's an important document. That's part of that. And if you raised an invoice, that gets captured as part of the fee book. So your recoverable expenses are a part of your revenue, right? And that's why it's captured under the fee book. And as I said, we'll have a quick look at how you generate trust general ledgers as well as expense books during the end of this webinar. So that's the first 20 minutes of this webinar, primarily talking about client expenses called disbursements between trust and general, some candidates for you to ponder and think about how you want to manage that expense. With trust, money gets cut right out of the trust account. With general, there's one additional step, which is you have to pay for it in advance, raise an invoice, and then recover that. Okay. Now let's move on to talk a little bit about your business expenses or your office expense. And some of the candidates, we've already looked at this slide, so we're just setting the context. Truly an expense or business expense is the money that you pay out to keep your lights on your office, right? Okay. Let's have a look at some of the types of expenses that a legal office comes across often. From an office management standpoint, you may be looking at furniture, right? Even whether you're just starting off or if you're a seasoned campaigner, you're looking at furniture, stationery, a common expense for all offices. Something specific to the legal business is the law society membership fees, okay? The annual fee that you pay, and you may decide to pay it one time or on a monthly basis. Regardless, it's a fee or an expense that you report to your business. If you're part of certain other associations, right, those are expenses that are incurred by your office or your business as well. Your phone bills, paying Rogers, Bell, TELUS, etc. Cable bills, if that's appropriate. Means, if you've taken, clients out or others, marketing dollars that have been spent through meals or advertisements, etc., to get your name out. Those are all office expenses that you should keep in mind that need to be tracked. And there's a great deal more very specific to office management, as I said, marketing, advertisement, sales, etc. Then comes your rent. Again, we've subdivided it so that it's a better classification of these expenses. Property maintenance, if you're paying rent, or if it's property maintenance. Corporate taxes are actually a type of expense too. And these are something that you come across regularly in your business. The bank charges, especially if you're dealing with trust money, quite often, in fact, not specific to trust, but even otherwise, there are bank charges. There are service fees that you pay, especially if you're collecting, let's say, transactions through a credit card, right? You pay service fee for each transaction. Those are types of expenses as well. Salaries to your employees in your law firm, and expenses to even pay back to your borrowings is a good example of an expense. But one of the common ones you come across day to day are the ones under office management, rent, bank charges, very common. And the question really is, yes, it's a recoverable expense, so I need to keep a track of all of my disbursements because I don't want to lose out on that. But how do I manage my business or office expense? How often do I, track and measure these expenses and report them into my bookkeeping process or software? And the key is point number one, which is regardless of whether it's the client expense or business expense, recording them as and when they happened. Capturing the moment, finding means either through the use of software tools or through a process that you can record expenses, especially as and when they happen. Because with the advent of technology, you now have the opportunity to reconcile both your trust and general accounts, right? And when it comes to general accounts, you're obviously able to reconcile your business expenses as well. And as part of capturing that moment, as part of capturing the expense as it happened, again, these are the top 5 or 6 things that you want to keep in mind. Again, we're trying to just mimic real life and what really happened in real life with regards to that expense. When did that expense occur? And this applies to your business expenses as well. Name and title and a brief description of that expense. Obviously, this is not tied to a specific client and or matter. That's a big difference between disbursement and your business expense, right? But it's still, you still want to capture the date. You still want to capture a brief description. What was this? It was a, purchase of stationery. Was this a rent? You could have subcategories as well. Within office expenses could be stationery. It could be printing. Many other subcategories that you can create for yourself. You want to capture the type of expense. That's exactly what I mentioned. The amount, right? And the amount consists of the total, subtotal, and the appropriate tax based on the jurisdiction. How did you pay for it? It's easier to reconcile those accounts if you've tracked right from get-go how you paid for it. An easy and easier way for you to track that would all come down to a process of knowing what needs to be tracked. Now, if someone, who do I have to pay it to? So if you've just purchased a laptop, let's say from Best Buy, it's always great to have that note that $1,500 went to Best Buy for the purchase of that laptop, which was an office expense. And the last but not the least, how did you pay for it? Was it through, a general account? Was it through an owner's pocket? Was it through your business credit card? Those are the things that you need to track as well. And as I've said, through the process of the demonstration, we're going to walk through creating a client, a matter, running through how you would manage expenses, both from trust as well as from general, and we'll jump into walking you through how you can individually capture expenses as and when they happen, or be able to capture them, as imports, as bank reports, because what's really happened in the bank is really what reflects that's happened in real life. And your goal in having to deal with all this truly is to mimic your bookkeeping software and stay as close as real life as possible. And everything that we're talking about today and all the tools, the process, all that is so that you can manage your bookkeeping software and keep it as close to real life. The reconciliation, which is an important aspect of your business, is managed and maintained easily. Okay? Now, some law firms, some legal firms do outsource all of this to third parties. You can have your own bookkeeper. You may have your own accountants who actually look for, the magic shoebox of expenses and bills that you drop them in. There are certain tools and products out there, including what we have at uLaw. There are other products too that do this, that allow you to manage and maintain and facilitate easier batch process imports for your accounting firm, friends, and partners. So what kind of documents need to be maintained for your office expense? Expense book, very important. The HST or GST or PST payable statement, because you've captured HST, paid HST. So we've kind of add them both, and it's either your money you owe the government or the money the government owes you. Profit and loss statement, and if it's applicable, wherever applicable, a borrowings report as well. Okay, so we'll kind of look at some of these documents along the way to the end of this session as well. Now, beyond capturing these expenses, so you're basically looking to track and capture expenses as and when they happen. So you've built a process of doing that with software, without software. Now it comes to the next part is over a period of time, right? You've built a certain characteristic or a certain way of how you run life, of how you run these expenses, right? But at some point in time in your business, you always want to take the time, take a step back, really analyze these expenses, analyze the revenue, but more especially the expenses. That could be on a weekly basis, could be on a bi-weekly, monthly basis. It comes down to your comfort zone of how often you want to keep tab on these things. We have friends who do this on a daily basis, legal friends, right, who run their business. But what's critical to keep in mind is taking advantage of software, whether that's Excel sheets or whether it's a legal accounting software. You want to take advantage of what these softwares can do for you. And one of the key components that we've seen, and we've incorporated as well, is the ability for the software to digest all the transactions that have happened and give you the analytics behind the scene for you to make informed decisions. And those could be like big English words, but at the bottom line, the automation that software and these servers and these robotic hands on deck can do for you is digest all of that transactions, all that data, the year-long worth of expenses that you've had, and give you a dashboard view of where those expenses have occurred, so that you as the business owner can start to assess what's going wrong, or if things are going right, how you can measure and manage and continue down that same path, or if you've suddenly realized that your expenses are over the roof, then you need to start to look at, under the hood as to where it's going wrong. And that's where the analytics become a big part. So many times it's reactive in many of, just like how life is, it's very reactive. But if you can convert that to be a little bit more proactive, have a process, have a methodology so that you're tracking this all day long, not just waiting for it at the last minute. Tools and software can actually help you and facilitate that for you, and you don't have to necessarily do it in a manual way. Questions such as, what is the ratio of expenses on a monthly, quarterly, or yearly basis? Okay. What is the health of your business? How do you compare your expenses between last year to this year, even last month to this month, right? So it really allows you to ask those questions that you didn't know to ask to begin with, to give you a better perspective of the health of your business. And as I said, there's two major components as to why you want to consider a software, even better, a legal accounting software. It's the fact that the software to begin with gives you the ability to track and record all these things as and when they happen. So you're not writing it down on a paper and then re-entering it. With the advent of technology, you can do it with or without internet today and then get back to using it. And the second important thing is crunching of all these numbers and running with the compliance ledgers and journals are done more easily with the software than you having to think about generating them in a manual basis. Okay? So I'll leave it at that and spend the next 15 to 20 minutes, because I really want to spend the time not just to talk about it, because this was a major feedback that we received from many of the webinars, with many times it could be just a really boring set of red slides and someone just putting you to sleep. So we've kind of tweaked it. Again, being very honest, this is not an intention to walk you through the product. It's truly to walk you through the concept of both disbursements as well as office expenses and why you should manage and maintain them, the documentation that needs to go behind the scene, both for the purpose of your business, more importantly as well for the purpose of your audit and for you to be compliant, which is very critical in this business. And if you're going to be doing it anyway, why not consider using a software that can reduce the amount of time that you spend in coming up with these documentation and tracking all this information. Okay? Again, for those who don't know us, we are a proudly Canadian legal accounting and practice management software. Our sole purpose of our product was to help legal professionals in Canada be successful, more importantly, compliant with their legal business. And we do offer a 30-day trial. It's a no obligation trial, and do check us out on our website at uLawPractice.com. I'm going to try and shift gears real quick. With all my demos and webinars, I always use our Playground account, and I use one such Playground account called Roger Moore. And I'm going to, for the purposes of today's topic, which is truly expense management, both your client expense and office expense, I'm going to first start with creating a client. For the purpose of using trust as an example, we'll put in a retainer, okay, and we'll try and run some information about how you would manage these disbursements, both from trust and general, and we'll look at all the differences between that. So let me go ahead and real quick create a client. Capture the source of contact. How did Mr. John get to know me? The Law Society obviously would love for you to put a communication address in. It's actually a requirement. Okay. And let me go ahead, click Save and Matter, so that I jump right into creating a file or a matter for that client, Mr. John Depp. And I do, during this time, if there's any feedback, questions regarding the slides that we've shared so far, or just the overall concept of the subject that we're dealing with today, I kindly request you and encourage you to please use the chat window, okay, to basically ask any questions. We have our support staff online. We'll be happy to answer any questions that you may have. So let's say this was a family matter. I'm going to say John versus Steffi. Okay. So I created the file. And now I'm going to assume there's a retainer that was involved. I'm just going to go ahead and accept that retainer for this matter. Let's say this was for $1,000. And I'm just going to say, for the person's demo, there's a quick check, generate a receipt, apply it to this particular matter, and accept that $1,000 retainer. Okay. Always a good habit to provide a retainer receipt, and that's why I generated this just by habit. Always a great habit to have. But we're not going to focus on the retainer receipt, so we're going to focus exclusively on the expenses. So let's assume the first example that we looked at is where we disperse right of trust. And we looked at some examples where it was great to actually use trust. And one of those examples was a court fee, which is really where you're incurring the actuals. So let's take that example, and let's say there was a court fee that was involved. Okay, maybe there's an application fee that was involved as well. And let's look at these two examples and how you can report them right from trust. So we know that there's $1,000 remaining in the bank, as what uLaw or the bookkeeping software knows at this time. I'm going to say add new disbursement, and I paid from trust. As you can see, there's quite a few examples, and we'll look at them one at a time. And we're going to say the actuals, $95. I paid out of my trust check, so let's assume that I did. And I'm going to say court fee. Okay, I wouldn't know. I think there's application fee goes to the Ministry of Finance. And let's just disperse. This is a disbursement that's happening for Mr. John for a court fee that you paid, and you're paying right out of your trust account, because I'm assuming you're carrying your checkbook for your trust account and you've just made that payment. Okay. Now you do have other options. You could have created a money order, or you could have had other ways of doing it. Just to keep it simple, I'm just going to go ahead and assume it was a check. And you can print a check too, but I'm not going to do that. So here's a quick and easy way for you having tracked and recorded that transaction as and when it happened. That's it, right? So you've now tracked that. Right away you've had that in your bookkeeping software. You've kind of followed real life. You've paid out that $95, and you can see that money is taken right out of your trust account. So your trust account now only has $905 for Mr. John Depp's family matter. Okay, it doesn't have $1,000 anymore, because you took that $95 for the court fee right from there. Let's take another example. Let's say I'll pay this off trust as well. And again, this is just an example. I mean, you obviously have the ability to decide which direction you want to take. I've heard examples of an application fee for a divorce case, let's say. Not sure if the number is right. So let's say it goes to the Ministry of Finance. And these are actuals, right? So that's coming right out of your trust account. Now you reported the second disbursement for this client, John Depp, for this matter, JD 79285. So you know have a matter number 2. One was for money taken out of trust for $95 for the court fee, and now you have another $350 that's taken out right out of your trust for your application fee. So $555 is truly what's still remaining in in your trust account. Now we looked at the second example, and we're going to jump into that. So I hope this kind of explained how you report trust-based disbursement. Now we're going to look at the second example we looked at, is where we have a general account involved. Okay, so we looked at maybe unit rate as a great example. We looked at examples where if you're actually dealing with markups. So we'll look at those two examples real quick. If I go and add another disbursement for this matter, and this time I'm going to say I'm going to pay it from general. Okay, and I'm going to say this was a fax. You can see it's changing for a unit rate measure. And let's say I'm going to go ahead and charge them $1. Okay, and I've just had 100 faxes sent out. We'll leave it to you whether you want to charge tax or not. Totally leave it to you, but if you are, you can leave that in. You also have the opportunity to understand or express how you paid for it, and if you want to expense this to your business or not. Okay, I'm not going to do it at this time. So this is an example where if, let's say, the fax machine in your office broke down and you had to run to the nearby Staples to pay for it, and if they actually asked you for more money than you paid out of your business credit card, and that's where you would expense this to your business as well. So you could do the same at the same time. But instead of doing that, let me just stick to the disbursements aspect to it. So now you've just disbursed a general disbursement for a unit rate of a quantity of 100 faxes at a $1 a fax plus tax. So now you have $113, and you're going to notice that that's not the money taken out of your trust account. Your trust receipt still remains intact. But what's changed is the projected balance. Now this is not the real balance. This is the projected balance as for what the bookkeeping software realizes that if you were to invoice this individual at this time, there's only up to 555 remaining, but if you were to remove another 113, that's what should remain in your, potentially, if you raise an invoice. It's the projected balance for it. But I'm not going to go raise an invoice yet. I'm going to use another example. I'm going to use the example of a consultancy expense. Okay. I'm going to say, stand in. Here's a great example of where you're going to charge the client $100. Okay. Now, but maybe the third-party consulting company charged you $120, or $135 in fact. You're just being nice. You're just marking this down. And you're only charging your client $100 instead of $120. So you're taking that $20. So this is a marked down expense. Okay? And you can choose whether it's other legal firms in your vendor list or if it's just consultancy. You could say legal consultants. As it's important, as we mentioned, the date when that occurred, the amount, any taxes incurred, who was it paid to, and how was it paid. Let's assume it was a check again that you wrote out of your general account. Like an example where you mark down your expenses, or sorry, your disbursement. You incurred a $120 bill, or let's say $135 with taxes, but you're only charging $113. You go ahead and hit save. You could actually easily done the other way around. You could have received, from the consultancy a $100 bill, and you may have charged your client $120. I just decided to do the other way around. So here are some examples of how you've dealt with, some disbursements. The first couple were from the trust account. The next two were from your general account. You can also have a miscellaneous expense. Okay. Um, and this is the example of the other way around, where there's a markup. And I'm going to just keep it simple and keep all of it under one general account. Yeah, so basically there's a quick question about if you were to pay your credit card for this particular, so let's say you used your RBC Visa to pay for this, okay? Basically what happens is once you get the money back in, you would transfer the money from your general account and pay off that credit card, right? That's what's really the bottom line. And if you've done so in real life, where you've transferred money from your general account to pay for your credit card, then it's the same thing that you have to reflect it in your bookkeeping software, that particular thing has happened. And you have to keep in mind what the amount was that you paid, right? So let's say the total amount paid was for $113, or in this case, it's only for $90.40, and that's what the amount was transferred. Then you would transfer that within the bookkeeping software too. So we've got a bunch of expenses done. The only thing left to do, because there are general disbursements, is why you have to raise an invoice. If there were only trust-related expenses, you really don't have to raise an invoice. But now that you have to, let's go ahead, generate a pre-bill. Always a great discipline to generate a pre-bill, review it, so you're happy with it. Right, so you've got all of your disbursements in one. You've got your fax, your stand-in, your dinner expenses, all that's come out of your general. Okay? And now you've got disbursements that have come off your trust as well. Very important, if you notice, is your disbursement for your court fee, $95, and a disbursement coming out of your trust account for your application fee for $350. Clearly tells your client there's still $216, which you may use towards dockets. But once ready, you can actually generate the invoice. And once you've generated that invoice, as I mentioned, because there's trust money involved, there is an eligible trust amount that you would move from. By clicking the question mark in uLaw, at least you realize that you can. That's the eligible amount that you can move. Notice this is $339. It does not include the $95 and the $350 fees that you paid out of trust. Okay, it's only what you paid out of general. That's the eligible trust amount. So the overall invoice was the addition of these two, technically. You'd go ahead and make that money, move it into your general account. Let's say you wrote yourself a check and did that transfer. Now to answer the question, if you were to move the $90.40 that you incurred to your business expense, you would actually transfer that. And you remove the money, and this could be an electronic fund transfer as well. This is how you pay from your general account to your credit card. The amount, this is basically you paying off your credit card bill. Okay? And what's important to note, and again with another 5 more minutes left, is now that you've measured all this information, what are all the compliance documents that you need to generate? It's important that you generate the general disbursement. I'm going to just do it for the month because it's simpler for me to showcase it to you. And if you notice, what's important as part of this ledger is the fact that you've captured paralegal consultant stand-in expense that you had, the total amount of $135.60. Very important that you capture the HST of $15.60. In this case, I'm using Ontario as an example, and hence it's the HST. It would be different for each jurisdiction. Here's where I used a credit card to pay for the 90/40, where I've exclusively collected, and these are ledgers that have just been generated. And if you look at a dashboard view, you kind of quick look at where your expenses are going for that month. 65% of it going towards rent, almost 25% are expenses on client accounts, which is critical because that's the recoverable expense. Okay? Other important documents would be your trust, because these are important ledgers and journals that you still need to generate. It's even more important that you reconcile these. So if you were to break it down by client, so if you look at your Mr. John Depp, having received that $1,000 retainer, you've had two direct ledgers or your trust disbursement of $95 and $350, and the remaining amount was through the invoice that we raised. One was for the stand-in, the other one was for the fax. So that was the stand-in fax as well. Okay. And last but not the least, in terms of the analytics that you drive, obviously this is a very colorful page. You have the opportunity now to ask all the relevant questions. All right, I want to know what my expenses look like for the month of December. That's the total expense for the month. Let's say I want to look at my expense book for the month of December. Okay. I want to know by category. Where is my expense going each and every month? So you kind of quick snapshot that 63% of your expense for this month has been towards rent, 25% through client account. With another 2 more minutes remaining, I do apologize for having gone through a little bit more. Another quick way, another aspect to your expense management is obviously your business expense. A great example, obviously because any legal accounting software would manage your chart of accounts, and so does uLaw. So when you report an office expense, it's always important that you categorize them. So if you look at office expense, you have the opportunity to subcategorize those expenses. If you just got an office supply and you just had a laptop purchase, maybe you got an invoice number, you can put the pre-tax amount, calculates the tax automatically, and you can say paid to Best Buy Inc. And again, you may have used your credit card. You just have to follow what the bank told you as the transaction amount. So this is one way, quick and easy way for you to submit an expense, and you can backdate this too. Maybe this occurred on the 11th. It's important though that you've captured the tax that you've paid, right? This is very important as part of the business expense, as I mentioned. So keep an eye on the $130, right? So that's one expense. Another quick way of how you can import expenses is, let's say you have all of this in your bank account. Depending on which bank you work with, you can start to import those bank accounts. Let's say for the month of December, you've downloaded a TD. We support many different standards. Let's say I'm going to do it with TD. You can download your TD's December statement and basically just start to import that right into your bookkeeping software. So Panera Bread, this could be an office expense. So you decide whether it's meals or it could be advertisement promotion. You can categorize it however you like and then bring that one at a time, right? This is another simple and easy way of bringing all the expenses. But what's important to capture in these expenses are the amount paid and, more importantly, the tax paid and the date. And the reason we do that is so that you can start to generate important ledgers, as I mentioned, such as your expense book. If I were to generate an expense book for the month of December, which is an important compliance document. So if you were to really look at our compliance panel, you would notice that you've got expense book as a critical component of the compliance documents that the auditors look for. So here's the expense book for the month of December by date. And it's very important that we captured the $130, which was a business expense for the laptop purchase. And why is that important? That's important because when you generate your tax, HST, and you do it for the month or the quarterly, depending on your business, we capture not only, or legal accounting software technically will capture not only the HST that you received through your dockets, but the HST paid as well. So basically you owe the government $5,862. Again, this is based on the quarterly payout. Important to capture right at the bottom. All the expenses, all the taxes that you paid, both HST paid, and here's the $130 that you paid for that laptop purchase, because we did backdate it to December 11th. Okay, so you've got the column of both HST paid and HST received through invoices, and you add them both, which tells you whether you owe the government or the government owes you money. Okay? So with that, having gone a couple of minutes over schedule, I will stop my webinar now and ask if there's any questions still that I could answer. Before I let you go, I do kindly request you to send in an email with just a quick confirmation of your presence in this webinar. This webinar, incidentally, is the last webinar for the uLaw webinar series for this year. We're going to be resuming our webinar series in the new year, and I want to thank everyone who's joined us today. Happy holidays and a very happy new year, and we'll wait for a few more minutes to ask for any questions or answer any questions that you may have. Thank you very much. I appreciate that this was an informational session. Okay, support. I have sent the email address in our chat window. Kindly do request you to review that and use that to send in your email. Would this webinar be recorded? Yes, as I mentioned earlier, this webinar is recorded and will be available to you as early as Tuesday, Wednesday next week. And if you can send us your email, it will be even better, as we can actually send you a quick email with the recording as well. Fantastic. Well, thank you once again. and appreciate you participating and look forward to seeing you in the new year. Take care.